Hello, and welcome to May 5th, Alpha CVS 152%. Let's go look at that chart. And there it is, 152% for CVS. We are now on rule number 4 of the exit. 150%. Last bar close, less than. We are going to exit this trade. So our exit order is right there at $83. If this drops before $83 tomorrow, we take that money off the table in anticipation of trying to keep at least $500 plus to drop the ode from 1250 from 1750 to approximately 1250. A nice big chunk going out of that. Now, if it gaps up and does not get taken out, we just repeat the process over again. No, yes, that's right. If the price goes up here, we just repeat the price all over again. We just keep on that last bar close. So it's going to be last bar close, and but it has to open above and stay above the $83. Doesn't stay above the $83, we're out and take that money off the table, and you have another win added to the stochastic strategy for year to date, which is really great because here it is, year to date, we are running at 25.8%. Yes, 29.8%, beating the SPY of 12.1. Also, remember, the nemesis of this week was a mutual fund that was 18.53, and the ticker symbol was PTSGX. So we are ahead of the game. With that said, let's move on now to our second place, which is Capri, which only needs 22 more percentage points, and it can get to the RRI 100 last bar low exit. So let's go look at that and see what adjustments we need to go there. And the reason I have to go so far out is because I got to be able to keep the ratio parameters or ratio meter on the screen so I can show it to you guys. So we finally got that close above, let's see, meaning 57.95, and we got the close at 58.74. We finally got that close above the third ratio there at 57.95, and now we have our last bar, our dipper low exit right here. Let me zoom in just a little bit closer. There it is. We have our dipper low exit is right there at 55.79. That is going to be our dipper low right there. May 5th, third ratio dipper low, 3-to-1 exit, 55.79. So this is our trading strategy and exit condition. Okay, that takes us over to T. Now T is already going in dipper low, even though it did not reach its third ratio. Why? Because this rule number 6 of the rules are that if we are less than 60 days from the expiration date, we need to get out of this trade as best as possible, and we go to dipper low. So at 60 days toward expiration, watching out for time decay, we are now here. This is the dipper low here for T, which stands for AT&T. And there it is right there. It's a little hard to see, but it's there, and you have to check your measurements. The high, the low high on the left was 31.11. The low was 31.05, and then it jumped up to 37.47, and that became the dipper low. And then we took off 10 cents the buffer. Remember, I run my buffers 10 cents to the nearest zero or the nearest 5. It looks at the action, but definitely keep your exits real close and real tight to go ahead and get that profit and get those wins get those wins in your scorebook. It's extremely important. And the reason why is because trading can beat you down. You can get into a slump where you have so many losses, and it's like, this really worth it? And that becomes the psychology of trading is keeping yourself positive by having a set of rules of engagement and your trading plan, keeping you on track. And the only way you're going to be changing your trading plan if it has a real long, not necessarily long, but it has a string of losses. You're going to say, what am I doing right? What am I doing wrong? And how can I make it better? And if you're getting into a real long string of losses, then you're going to have to look at your trading plan and say, you're not working. I need something better. Or look at it and see about tweaking. There's nothing wrong in tweaking. The only thing would be is that you can't be tweaking all the time, and you got to come to some settlement of rules. My rules of tweaking is it's got to give it a month. I give it 1 month, and if in 1 month it doesn't poor performance, I go on to tweaking it. But that's quite called the Elvis Shift. The Elvis Shift is when you are going to tweak something and saying, okay, if I reach the second ratio, there are people who will take money at the second ratio. There's nothing wrong with that. You take the money off the table. Also, too, look here. Had I taken this trade here, the 3-to-1 right there, I would have been out of this trade back here on April 22nd, right there. But because we are going on the 3-to-1 ratio with the dipper low, dipper high exit. That is what this strategy is running right now. Does taking money right off the table at 3-to-1 works? It does. Just the thing is that you missed up the opportunity of not getting the longer runs. If you're happy with that, that's good. Remember, one of the rules of trading is be satisfied. If you're satisfied taking money at 3-to-1, do it. Just take it. And then there's nothing wrong with that, because the thing is that you have a set pattern, a set way of going. You're risking $1. You're risking $1 to make 3. That's it. Okay, so that's the lecture for today, is maintaining your positiveness, maintaining your trading rules, be alert to making changes when necessary, and then have a steady plan of when you're going to make that change, so you can track it. You can say, okay, March we did this kind of strategy, it didn't work well, maybe I try May. Try April. April, you do a tweak and do it next. And then this is the whole evolution that I'm doing here, showing you guys that stochastic strategy does work, and we are doing some tweaks along the way to try to make it better. Now, I have to warn myself. In Unknown Market Wishes by Jack Swagger, Peter Brandt himself said it. You can over-optimize. You can over-tweak so much that you have the perfect scanner. Problem is, you're only going to get one trade a month, and that one trade a month is going to give you maybe it might give you an ROI of 100, but it's going to be one trade a month where you have opportunity of getting other trades along the way, and that's not bad. 100% per month, that'll be kind of cool, but you're going to have a lot of patience to follow that kind of strategy and planning to go through. But again, there's nothing wrong with it as long as you have a set trading plan and a set of rules, and the rules of when you're going to get in, when you're going to get out, and how you're going to tweak if necessary. Okay, let's move on now to, we have RTX in 32nd position, 32%. And here we are with RTX. And RTX is ever so small. It's ever so short of the third ratio. 84.19, and we got a close today of 84.13, so we're still 6 cents short. So we waited out, but look, the incline is really nice. It could be a popped up tomorrow. We'll just have to stick with it. Okay, now IAU is something that I had bring to your attention. It's the same problem. It's running at 1%, and here's something I need to bring out to your attention on IAU, and that is come May 16th. May 16th is the 60-day rule. Right there. We are at July 16th, at 2 months out. We're going to have to go to the 60-day rule come May 16th. May 16th is a Sunday, so starting right off Friday afternoon at the end of the day, all this position will move to whatever the closest dipper low is available and start taking out to dipper low. With that said, we also had 2 exits today, which was disappointing, but it happens. DIA got taken out today for a loss of 26%, 13 days. 168 was a loss, 170 loss with a new O of 1541, and ATVI got taken out today with a 1.6%. Look, 1.6% loss with a only lost $10, and it went with a new of 1255. And with that, we'll thank you today for the report on Losers Become Winners, Stochastic Strategy at 25.8, spot against the SPY 12.1, and CVS at 152. Thank you very much for stopping by and checking it out.